Um, yeah, Scott Bessent famously has said in the past that, you know, 80% of a trade is macro, you know? And so I think for the last 3 years, most investors took that to heart and became armchair macro people. But what threw people off over the last 3 years was a few things. Number one, they were too grounded in like believing there's a science to the yield curve. Like the yield curve was inverted. Now, we explained at Fundstrat that the inversion was due to inflation expectations. Inflation was higher near term, so the nominal rate should be higher near term, but they would drop long term. That's why the yield curve's inverted. But everyone said it was a recession signal. Number two, I, I think what people got wrong is that we never had experienced inflation before. So everybody was anchored in 1970s as like the template, not realizing that we didn't have the same intractable conditions to cause inflation. So I think people were structurally bearish because they're like, curves inverted, there's a recession. Second, we have stagflation. And then they missed that companies were real-time dynamically changing their business models to deal with inflation and a tight Fed. And they delivered good earnings. So I think Fundstrat in our focus for our clients was, look, let's just find the best companies. They're not really going to be beaten up because of inflation, and that thesis proved correct.
BitcoinZilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to BitcoinZilla today and enjoy the new edge.
In this video, Tom Lee will talk about urgent market warnings. Buckle up and let's catch him up to know more.
And every time the S&P is down 2 or 3% or AI stocks are down 5, I think people get really cautious. I think, first of all, bullish sentiment is not even anchored properly. People become so hesitant. I think everybody thinks there's a top. Here's the thing. When everyone says there's a top, there cannot be a top. The top in the dot-com was because nobody thought stocks could ever fall. They actually thought we were entering like an era of continued prosperity. The second thing to keep in mind is that markets have been strong for the last 6 months. There is incredible demand for equities because people are really off sides. That's what you have to keep in mind. In April of this year, people thought we were facing Armageddon because of tariffs, and you had many economists proclaiming a recession, and that's how institutions traded. They were actually positioned for a massive bear. They can't fix that in 6 months. So we're now getting into year end where institutions, 80% are trailing their benchmark this year. It's the worst performance for institutional fund managers in 30 years, and they have 10 weeks to fix it. They're going to be buying stocks. And finally, visibility for AI has not even been affected by the government shutdown or anything. So companies are going to start, as they think about 2026, start making announcements. So I think in the final months, I think one surprise is the AI trade's going to come back strong because it's wobbled. But the Fed is getting people scared because was the Fed going to suddenly hammer down on things? But keep in mind, inflation has been softening. So if they cut in December, they're confirming they're on an easing cycle. Now that meeting's not for a few weeks, but that would be really bullish for financials and small caps. And by the way, what's correlated to tech and financials and small caps? It's crypto. So I think you're going to have a massive crypto rally as well. Well, I think people have dampened their expectations for Bitcoin partly because Bitcoin's been treading water. And there have been a lot of OGs, original Bitcoiners that are selling above 100,000. But it is still an underallocated asset class. So I think Bitcoin actually potentially can get to the high 100,000s, maybe even 200,000 by the end of the year. I think it's a big ask. But to me, what's more obvious is Ethereum can have a huge move into year end, because even Cathie Wood wrote about it. She thinks stable coins have been cannibalizing demand for Bitcoin, and gold and tokenized gold is cannibalizing demand for Bitcoin. But stable coins and tokenized gold run on smart contract blockchains like Ethereum, and Wall Street is building, and Larry Fink wants to tokenize everything on the blockchain. That means Ethereum is where people are starting to raise their growth expectations. And if you're raising your growth expectations, then your discount to the future's going up. So I think that there's a bigger move in Ethereum. And Mark Newton, our head of technical strategy, thinks we can be like 9,000 to 12,000 by January. I think that's about right. I think Ethereum, just 3,600 more than doubles between now and year end, or between now and January.
Bitcoin is flashing signs of a potential bullish reversal as apparent demand surges to a 4-month high. Recent on-chain data shows a sharp rise in Bitcoin's apparent demand, a metric from Capriole Investments that measures mining issuance minus long-term dormant supply. This figure has climbed to 5251 BTC as of November 11th, marking levels last seen in late July. The spike suggests that traders and investors are once again taking a risk-on approach amid improving macroeconomic sentiment and renewed confidence in digital assets. Spot trading activity has also picked up, with Bitcoin's weekly trading volume jumping 23% to $14.1 billion. According to Glassnode, this increase in spot volume signals stronger investor participation and the possible breakout move. Bitcoin's recovery to $106,000 is now being viewed as an early sign of buyer re-engagement, and market optimism is growing as the U.S. edges closer to a potential Fed rate cut and renewed economic stimulus. Still, analysts stress that Bitcoin must decisively reclaim the $110,000 level as support to confirm a sustained recovery. Swissblog noted that once bulls secure the 108K to 110K zone, momentum could rapidly ignite, pushing prices toward new highs. If this key level holds, analysts like Michael Van de Pope predict a rally toward Bitcoin's all-time high of $126,000, solidifying the bullish comeback.
So this is really the reason 2026 is probably not as bearish as people think, because now next year, I think people are going to be like, wow, wait, NVIDIA and all these are public companies and their earnings are growing 50%. I think people are going to actually start chasing them next year. That's really positive for crypto because, as you know, there is also this argument today that the crypto cycle is a 4-year cycle, so it should be ending now. So people are trying to fade that. I think people are trying to fade everything, the S&P and the crypto, but forgetting that the Fed is beginning to cut. And the ISM, and we've written about this, is more correlated to Bitcoin than monetary policy. And until the ISM gets to 60, Bitcoin really can't peak. So I think this is pretty positive for crypto. But crypto, it's kind of been hurt because, monetary liquidity hasn't been really increasing. The Fed has been under QT, quantitative tightening. That's ending in December. And the Fed hasn't really given clear signals that they want to ease. So I think there's been a little bit of confusion for investors.
Samson Moe, CEO of JAN3, has pinpointed the recent wave of Bitcoin selling to what he calls newish buyers, those who entered the market within the past 12 to 18 months. According to Moe, these investors, who secured gains of roughly 20 to 30%, are now taking profits amid growing speculation that Bitcoin's current cycle may have already peaked. Many of them, he explained, have been spooked by bearish sentiment and are rushing to lock in profits before any potential downturn deepens. Moe also noted that the sell-up has been exacerbated by activity from longtime Bitcoin holders, often referred to as OGs. Their decision to offload holdings has reportedly influenced newer investors to follow suit, creating a ripple effect that intensified selling pressure across the market. Despite the short-term weakness, Moe remains optimistic about Bitcoin's long-term prospects. Looking ahead, he believes 2026 could mark a major comeback year for Bitcoin, aligning with similar forecasts from figures like Charles Hoskinson. Interestingly, JP Morgan has echoed this optimism, projecting Bitcoin could still hit $170,000 in the coming months, suggesting that the current pullback may only be temporary. If you have been watching so far, thank you so much for watching, and do not forget to subscribe to BitcoinZilla for daily news all for free. That's all for today's video. Until next time.